right, welcome back to the Nadlin Forum Podcast Daily. I'm Ruby Sturt, here with Lior, and today we're diving into rental trends, specifically why single-family rent growth just clocked its slowest pace in 15 years. I don't know about you, Lior, but I just keep flashing back to 2022 when apartment hunting felt like, I don't know, a competitive sport. Like, you blink, rent's up another $50.
Yeah, Ruby, I remember those days, even in New York. Every open house felt like an auction. But now, according to Cotality, national single-family rents only grew 1.4% in August. That's a major slowdown. Lowest since, 2010 or earlier?
Feels like the first time in ages renters can actually exhale, right? But I'm also wondering, is this real normalization or just a catch-our-breath moment before things heat up again? Because after years of double-digit jumps, 1.4% growth almost sounds cozy. But it's got to be tough for landlords who basically got used to annual windfalls.
Right? I mean, a lot of property owners built their strategies around those 15, even 20% hikes during the pandemic. Now you see the pendulum swinging back. Landlords might have to reset expectations. And there's also the supply piece. Tons of new single-family rentals and apartments are finally finishing construction. More choice means more negotiation power for renters, right?
Totally. And not just at the high end either. Cotality says even luxury rent growth slowed to just 1.6%. And if you're renting on a tight budget, it's even less, like 1.1% growth. So it's a broader shift, not just for penthouses and fancy pads.
Yeah, it's kind of a market-wide breather. But like we talked about in that episode on inflation and the Fed, it ties back to affordability pressures and economic shifts. It's good for tenants in the short term, but for landlords and investors, adjusting to single-digit returns is a big change after pandemic-era expectation.
What's wild though, and I love this data, is how uneven it all is across regions. Chicago, of all places, is leading the pack with a whopping 4.7% annual rent growth. I mean, did anyone have Chicago on their hot markets bingo card for 2025?
Actually, I just had a conversation with a group of New York investors. They were all in on Dallas a year ago, but now with Dallas seeing a 0.6% rent decline, a real drop, they're rethinking everything. I told them, look, the Midwest is calling your name. Suddenly, Chicago and Midwest metros look really appealing.
So good. But why is Dallas slipping? It sounds like all these new multifamily buildings are going up, so there's more empty units, more competition for renters, and boom, prices soften. But it's not just Dallas. Even LA, Philly, DC all saw a bump while the Sun Belt is cooling off. It's like all those trend lines flipped since the pandemic.
Exactly. Like LA had 2.8% rent growth, Philly 2.7%, DC right there too. Cotality points to limited supply in those cities. And in Chicago, plus steady immigration, and in some cases, recovery from stuff like natural disasters. That pushes rents up. But in places like Dallas, where construction cranes never stopped, too much new supply is pushing rents down. Supply and demand really works here.
And it's not just single family, right? The apartment market's getting a reality check too. Apartment List numbers say national vacancy in multifamily is up to 7.1%. That's huge. Is that like the highest ever?
According to Apartment List, yes, it's the all-time high for their index. Even as new construction starts are slowing, developers are still finishing a flood of projects started during the pandemic boom. So we're going to see this oversupply for a while. That's also why we're seeing negative rent growth in the national multifamily market. Rent down about 0.8% year over year in September. Not a crash, but definitely a shift.
So for investors, it's no longer just buy in the hottest Sunbelt city and wait. You've got to get granular. Look at city fundamentals, job growth, local population flows, maybe even like dust off that old weather risk checklist after what happened in some regions last year.
And honestly, good market research is back in style. You can't just follow the headlines. The cycles are regional, sometimes even hyper-local now. The pandemic era rising tide lifts all boats mindset is really fading.
All right, but let's call it out. Even with this cooling, rents are still, 22% higher than they were in January 2021? That's a wallop if you're trying to move out on your own for the first time, or just hoping for a little relief. The latest national median is still around 1,394, and that's only, $11 down in a whole year?
Yeah, exactly, Ruby. We're seeing a market resetting, but not collapsing. Construction is still adding units, and vacancies are way up. But that doesn't undo years of sharp rent hikes almost overnight. Plus, higher mortgage rates are keeping some would-be buyers in rental homes. But even that boost in demand is tapering off as economic uncertainty makes people hesitant to move. You see people just staying put longer. They're waiting for more stability in the job market and mortgage rates, honestly.
And those high mortgage rates? They stick renters in this expensive limbo, a bit of a vicious cycle. Plus, vacancy rates up to 7.1% should theoretically force prices down, but it's not happening fast enough for people who've seen rents skyrocket since the pandemic.
Right, and that's probably why, despite a much-needed market rebalancing, like you said, a lot of families don't feel any real relief yet. If you got priced out last year, a tiny decrease doesn't suddenly turn things around. This is still for many the new normal, just an expensive one. And if builders slow down on new projects because of tougher financing or higher rates, the supply side relief could stall too.
Yeah, real talk. Are we just settling into this high plateau? Or could more supply, or maybe another shift in mortgage rates, bring some real relief? Personally, I'm feeling like it'll be slow going before renters actually feel a difference in their wallet.
Honestly, barring a big shock, I think we're looking at a balanced market with moderate rent growth for the next couple of years. As we've seen from all these recent episodes, from inflation's effect to rate changes to supply chain surprises, the rental market responds to a tangled web of factors, not just one headline. It's about patience, research, and looking past the numbers on the surface.
Couldn't have said it better. That's a wrap for today's episode. Big thank you to everyone for tuning in. Keep an eye out for more deep dives and daily updates. And Lior, always a pleasure chatting trends with you.
Thanks, Ruby. Great convo as always. Thanks to you all for listening, and we'll catch you on the next episode. Take care, everyone.